Hey everyone, Nick Shaheen here looking at Zoom. Clearly a very popular stock and for good reason. It's exciting. It's a COVID-19 stock, but I did a video on this one last time. It was rallying and I thought it was nonsense at the point it got to. Not the stock itself. I love the company. My family, my friends are all using it. It's becoming a verb like Google. You know, let's Zoom this, or let's get on Zoom or something. So it deserves all the credit. It's not the first mover advantage, but perception is everything, right? So it's got the brand recognition there. And they reported a huge influx of users, so there's no denying that hundreds of millions of people are using Zoom. But that's a different conversation. So let me remind you that I don't see the future. So last time I did a video, I think it was late April, and I literally said, if I'm not long Zoom at this point, I wouldn't get in. And then minutes later, don't remember how many, I was in a chat room, somebody said, what happened to Zoom? Like, maybe somebody watched my video. No, it wasn't my video. A headline broke out. So I'm not, this is not the first time things like this happen. I didn't see the headline, but headlines have a knack for breaking out at exactly the right technical place. So let me show you something. Don't take my word for it. This is my video from then, right here. Not a stock I trade usually, but okay. So you had a burst and then consolidation, dip, whatever you want to call it, and another burst. Usually they should be equal. So if I'm not long Zoom, I'm
this candle.
Not getting long here. This candle right here is pretty important. So if somebody said, well, draw me a box for the range that's going on here in Zoom, I'll do this. Okay, back to this video here. Clearly a lot has happened since then. That was the candle in question. Let me see the box in question. That was the box in question. You saw me draw this box up here. A lot of lines. So I'm going to take them out until we talk about what I'm doing here today in this video. I don't hate Zoom. I'm not a perma bear. I'm the same guy who said stay long, stay long, stay long all of last year through all the tariff wars because of all BS headlines. I'm not that guy. I'm just saying, where is the obvious place to enter? And this is not it. So here was the candle and it fell on a headline, this headline right there. So I said minutes later, so it's 3 hours later. And the stock fell, whatever, 30%-ish. From top to bottom. And this wasn't the place to short it right here. Just for the same reasons I'm offering you now. It's not an easy, sorry, the chat room is open. So if you want to join the chat room, by the way, in the description there's a link. You can try it out. We do this all day, every day on any ticker you want. And we do good work. So I can tell you that the exuberance, the problems I have is the overall exuberance with the COVID-19 theme. Because this was the burst of it, and this is the second burst of it, and it's not even at the top. The NASDAQ is at all-time highs almost on Tuesday morning, and then luckily the market just turned. I tweeted, if you follow me on Twitter, if you don't, go follow me on Twitter and Stock Twits. I tweeted, short this mother, or sell this mother on the NDX. And I did, and I shared it, and it paid big time in just hours. Again, not because I see the future, for the same reason I'm talking about this video. This is not an obvious place to go long. If I go long this stock here, or the NASDAQ in general, I'm committing to a super long term, because the more likely action is lower from here. I'm not saying go out and short it, although I would, but that's not the right call here. The message of this video is, don't chase the momentum because frickin' Jim Cramer says, go buy my stock. He talks from both sides of his mouth. In the afternoon show, buy, 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 buy. In the morning show, he's all cautious. So down the line, he can claim both. Yet he's buy, buy, buy for months. And then one time after the Super Bowl, he said, hey, I'm a little worried about the market in conversation with somebody else. And now, every time the market falls, I told you, I've been telling you for months. No, you haven't. Okay, so I'm telling you to tell yourself to find the right levels. Okay, just like this one candle worries me then, this is the range that we should look at. The top of this 2-hour candle, these are 2-hour candles, and the bottom of this 2-hour candle. This is a range in contention. So the point is, let's find a better spot to enter the stock. Right now, it's in the hands of the buyer on the shorter term, for sure. So the dips will be bought. That's why you see the higher low. And but we also have lower high. So it's coming to a point and something will happen. When a stock goes from trading this high into a pinpoint, relatively speaking, from this is a wide range and then now it's this range, something has got to give. So if I do this, let's bring the crayons. Oh, by the way, I also tweeted, as far as shorting the market, I used the silly drawing. If you don't like these crayons and you think they're silly, go back and look at my tweet that has a ladybug on it eating a snail. I said, short it. It's basically the inverse cup and handle, but I just made fun of it. And, you know, somebody, of course, came back making fun of it. But the content was serious. I use these ridiculous things to explain a concept that is true. So look at it. If I lose this level, some people like to chase the breakout of a trend. I prefer to see the breakout of the level. So if they see the breakout of the trend, they start running. I'd rather see the breakout of the level, even though I miss on these few bucks. Same here. They see the breakdown of the trend, they start shorting. I'd rather see this fail. So my triggers would be this and this. So if this breaks out, if the bulls break out of this level, I would chase it. I would chase it and sell it at this. This would be my selling point. So it's a scalp. If they break out from this, I would chase it. To where? Nowhere. There's nothing above. So yeah, ooh, all the way. So conversely, I would short it for a trade if it loses this, but there are support levels, important support levels. So the trade on it, I just gave you the trading. The investment on it, somebody that's looking to buy something and hold it for a while, zoom out. This is a 2-hour candle. I zoom out to 1 day. So I can tell you and reset for a year. So this is 1 day, 1 year. You can tell how they took their time recovering some sort of a rounding bottom, and then they hit the same consolidation zone. You see that? That's a concept that's important in this video. This consolidation zone served as a huge ledge. They took their time getting back to it. They hit it and they hit a wall. But they didn't take their time breaking from the wall, and then they never looked back. So this is a strong base. On top of it, they built a smaller, stronger base here. Stronger mathematically. There was more trading here than in this whole section here. Okay, so this is a better base, higher. So if I were to put a box, I'll put a box around this one candle here. So if I split it, eyeball 114, 115 plus or minus $5-6. In fact, actually the better, safer place would be 110. Why? Because that was the place where they immediately rejected on the huge dip here, and this huge dip didn't even come close. So you can see the buyers are in control. That's why you get higher lows. Same concept I just mentioned. Now I'm trying to find places that are okay for me to buy. By okay means it's not an obvious mistake. Wouldn't you have hated this if you heard Kramer or whoever fan was that buy it and you were the person that bought it here? Or here? You know, now it looks okay. But if I was the buyer here, I'd be out here. If not here or here. If I'm not out yet, I'm gambling. Unless my perspective is super long term. So the better place to buy is somewhere in this cluster right here. That's the best base right here. Take the middle of it. Somewhere in the middle lies the truth. So if this falls to here, I'm a buyer. Because onus is on the bears to tell me that they can defeat this. So far, they can't. Under extreme conditions. The world ended. And we had some whatever headline came out on Zoom. Was that the security headline where people were crashing the... Okay, so all the advantage of COVID gone, and they couldn't do more damage than this. Whatever, can't remember the headline here. Oh, Facebook competition. Yeah, they couldn't break this. So this brings me to the second spot I would buy. Second best. For many reasons. A couple of huge indecision candles, a top that was beaten, Very, very argumentative spot here. So I like it. The first place I would buy on a dip if I was a fast trader is somewhere around here. So what am I saying today? I'm saying, why don't I wait if I'm not long already just a little bit? What am I missing on? $5? Look at the potential downside I could be hitting. It's not going to go straight down, although it has before. And why would I risk for $5? Why would I risk $35, $40? So this is the only logic I'm offering here. So if you love the stock, don't hate me because I'm beautiful. Now, don't hate me for saying this. For those of you younger people, this is an old commercial. So I would just wait out a few candles and see what happens. Like tomorrow, the last 2 days were yay, and then whoosh, close on the low. Try to rally with Powell speaking, saying we're going to give you trillions of dollars, and then they blame it on Tepper. Tepper said he's short, but he didn't say he's short. He said that things are expensive. Well, duh, things are absolutely frickin' expensive, including this guy. And then the markets went like this. So trade your own thesis. Why do I say this is expensive? I don't have a problem with high PEs. Okay, I don't at all. Zero problems with high PEs. A 2,000 PE is pretty fucking high. So there's no slicing it. I can overlook this. Okay, Amazon is 100 and whatever, 102, 105, but the difference between this and Amazon, by the way, people say, well, Amazon is a mature company. Amazon is a startup still. It grows 25 to 35% every freaking year. Yeah, not too many big Zoom-like companies are growing like that. They claim they are, but they're not. This is the problem. 66 times its sales. That's how much the price is. You want to guess what Amazon's is? If you've seen any of my other videos, you probably know it by heart. 4 times its sales. Okay, so let's pick another. Well, this is different. This is like a Momo stock. Okay, Shopify. That's a bigger Momo than Zoom, right? Bigger Momo. It still loses money, so it doesn't even have a PE. It's cheaper. 53. This jumped. This couple of days ago, I looked at it, it was like 45. So it must have had a rally. And Shopify, you think this moves fast. Yeah, look at this, and like $800 stock. So I don't have a problem with expensive. I was arguing with everybody that was shorting Amazon for a decade. You're looking short term. You have to spend a lot to grow a lot, but it has to be within reason. Like, why are you 60 times your sales and growing? What does it grow? I don't know, 40% a year, while another company is only 4 times its sales and it's growing 35 times percent a year. So this is the kind of logic. Don't hold me to these numbers, but this is the logic. Relative to the expensive stock, it's even expensive. So value is not an argument for buying the dip. Only technicals are. Trust me on this one. Throw out the book. If you believe in the company long term, why not pick a better spot to enter than an all-time high? It's like right here. Where's the rush? Where's the rush? That's my concept. Either trade it by chasing the breakouts or just wait for the dip. It will come. I promise you there will be a dip sometime where it goes, whoa, wow, what just happened? Somewhere, sometime. It only takes time. So where's the rush? Sometimes you look at a stock and you say, I missed it. Anyway, so this is not me picking on a company. This is me picking on picking an entry point. So again, if it falls to 150, it's buyable, plus or minus. 142, it's buyable, even better than the 150. Leave room for error because you have a bounce level right there. 132, 133, somewhere around these funky candles right here, it's even better. The best place is around 115 plus or minus $5. And how can I do all of this today without the stock falling? If I wanted to buy it at 115, hit me up, because there's a way where you can get paid for that opportunity. Get paid today for that opportunity. But you have to learn a little bit of options. And it's so easy. Just hit me up. Nick signing out.